Greetings, my dear viewers. Today is the 21st of August, and today in our issue, the Federal Reserve announces that its new instant payment system, the FedNow service, is now live. IMF Executive Board finalizes Article 4 consultations with the Kingdom of Lesotho in 2023. The daily price of the OPEC basket was $81.28 per barrel on Thursday, July 20th, 2023. And so here we go. The Federal Reserve announces that its new instant payment system, the FedNow service, is now live. The Federal Reserve on Thursday announced that its new instant payment system, the FedNow service, is now live. Banks and credit unions of all sizes can sign up and use this tool to instantly transfer money to their customers any time of day, any day of the year. The Federal Reserve created FedNow service to make everyday payments faster and more convenient in the years ahead, said Federal Reserve Chairman Jerome H. Powell. Over time, as more banks utilize this new tool, the benefits to individuals and businesses will include the ability for an individual to receive an immediate paycheck and for companies to have instant access to funds once a bill is paid. To kick things off, 35 early adopter banks and credit unions, as well as the U.S. Department of the Treasury's Bureau of the Fiscal Service, are ready to utilize instant payment capabilities through the FedNow service. In addition, 16 service providers are ready to support payment processing for banks and credit unions. When instant payments become fully available, they will bring significant benefits to consumers and businesses, such as when quick access to funds is useful or when just-in-time payments help manage cash flow in bank accounts. For example, individuals can receive their paychecks instantly and use them the same day, and small businesses can manage cash flow more efficiently without processing delays. In the coming years, bank and credit union customers who sign up for this service should be able to use their financial institution's mobile app, website, and other interfaces to send instant payments quickly and securely. As an interbank payment system, FedNow service works alongside other Federal Reserve payment services such as FedWire and FedACH. The Federal Reserve intends to work with more than 9,000 banks and credit unions nationwide to make this service widely available to their customers over time. The IMF Executive Board is finalizing Article 4 consultations with the Kingdom of Lesotho in 2023. The Executive Board of the International Monetary Fund, IMF, has concluded Article 4 consultations with the Kingdom of Lesotho. Lesotho's economy continues to face a number of post-pandemic challenges. Climate shocks, delays in infrastructure projects, high food and fuel prices, lower diamond prices, layoffs in the textile sector, and weak regional and external demand have put pressure on activity. High government spending also continues to distort incentives and hinder private sector development. Overall inflation remained high, averaging 8.4% in FY 22/23, 2 percentage points higher than a year earlier. In addition, food inflation rose to 10.4% over the same period. To anchor inflation expectations and maintain the exchange rate peg, the Central Bank of Lesotho continued to monitor changes in the South African Reserve Bank interest rate, raising rates by 425 basis points from November 2021. The government prioritized fiscal consolidation amid unanticipated transfers from the South African Customs Union, SACU, which helped ease short-term pressures on financing and reserves. However, the fiscal deficit narrowed to 7.7% in FY 22/23 due to lower revenues and tight spending, with public debt rising to nearly 60% of GDP. Efforts to contain spending were hampered by persistent weaknesses in public financial management. The current account deficit is projected to widen to 7.9% of GDP in FY 22/23, reflecting the situation of the financial center. In March 2023, gross international reserves, excluding the second phase of the Lesotho Highlands water supply project, declined to 3.8 months of imports. Despite ample liquidity in the financial sector, credit growth by the end of FY 22/23 increased only marginally to 8.7% year-on-year, despite tightening financial conditions. Overall, credit to the private sector remains broadly unchanged at around 20% of GDP, with banks mainly lending to households. Looking ahead, the outlook is disappointing. Real GDP is projected to grow by 2.1% in FY 23/24 and to average the same level over the medium term. In the absence of stronger consolidation, the fiscal position is projected to deteriorate over the medium term due to lower SACU transfers, pressure on the wage bill, and recapitalization of the pension fund. The government is encouraged to move forward with a tentative growth-friendly fiscal adjustment to ensure debt sustainability and maintain the exchange rate peg, along with wide-ranging structural reforms to support the transition from government-led to private sector-led growth. Executive Board Assessment. In concluding the Article 4 consultations with the Kingdom of Lesotho, the executive directors endorsed the staff evaluation as follows. Staff commends the new government's bold reform agenda and encourages it to make the most of the economic, financial, and political opportunities. As the health crisis has largely abated, staff welcome the government's vision of a smaller and more efficient public sector with high-quality service delivery, providing opportunities for private sector growth. Unforeseen SACU revenue, if well managed, also provides an opportunity to build reserves and finance long-term, growth-friendly fiscal consolidation through a thoughtful sequence of reforms and CDs. The recommendations of the 2022 Article 4 consultation remain valid. A fixed exchange rate means that the adjustment should concern fiscal policy and structural reforms. If current policies remain unchanged, they could lead to a sharp adjustment, with a significant impact on economic growth and inequality. The gradual weakening of the external position, which is assessed in FY 22/23 as weaker than that implied by fundamentals and desired policies, underscores the fragility of the current economic model and the need to consolidate public finances. Fiscal sustainability will require a determined effort to contain initial spending and introduce PFM reforms, without which Lesotho's budget cycle will continue. Despite recent unexpected SACU gains, pressures are expected to resume in the medium term, again jeopardizing reserves and debt sustainability. Reducing current expenditure, especially public sector wages, and rationalizing public investment, complemented by broad PFM reforms, are crucial for adjustment. Fiscal policy and revenue administration measures can also improve fiscal outcomes in the near term, while minimizing the impact on economic growth. The government will thus be in a better position to finance key development priorities and strengthen social safety nets. Alongside this, wide-ranging structural reforms will be vital to transition the economy to sustainable, resilient, inclusive, job-rich, and private sector-driven growth. Staff strongly recommends efforts to improve the business environment, enhance financial stability, and expand business credit. As the public sector shrinks, expanding access to finance and improving the business environment will be critical. Thus, the premium for early reforms to address credit constraints, insolvency arrangements, consumer protection, and governance and corruption vulnerabilities to restore investor confidence and create an enabling environment for growth is higher than ever. Governance diagnostics can be based on the RGDP/RFI commitments for 2020. Staff strongly encourages the authorities to continue their efforts to build capacity, improve data quality, and closely coordinate macroeconomic policies. High-quality data and information sharing are crucial for policymaking, from measuring economic performance to forecasting. Close coordination between fiscal and monetary authorities is also necessary to balance competing objectives for spending, debt, and reserves, and to ensure that macroeconomic policies are consistent with the exchange rate regime. In the absence of coordination, credibility will suffer and confidence will be lost. Staff recommends that the following Article 4 consultations for Lesotho be conducted on a standardized 12-month cycle. Under Article 4 of the IMF's Articles of Agreement, the IMF holds bilateral discussions with member countries, usually every year. A staff team visits a country, collects economic and financial information, and discusses the country's economic development and policies with officials. Upon returning to headquarters, the staff prepares a report that serves as the basis for discussion by the Executive Board. The Executive Board makes decisions according to its interim procedure when the Board agrees that a proposal can be considered without formal discussions. The daily price of the OPEC basket was $81.28 per barrel on Thursday, July 20, 2023. The price of OPEC's basket of 13 crudes stood at $81.28 per barrel on Thursday, up from $81.46 the previous day, according to OPEC Secretariat calculations. The OPEC reference oil basket, ORB, consists of the following grades: Sahara Blend, Algeria, Gurasol, Angola, Geno, Congo, Zafiro, Equatorial Guinea, Rabi Light, Gabon, Iran Heavy, Islamic Republic of Iran, Basra Medium, Iraq, Kuwait Export, Kuwait, ES Cider, Libya, Bonny Light, Nigeria, Arab Light, Saudi Arabia, Murban, UAE, and Miri, Venezuela. Subscribe to the channel, put a bell and be the first to know about the world news of finance and economy.